What is going on, Benzinga Nation? Good morning to you, and we thank you for joining us on this special show. You know, here at Benzinga, we typically like to find different ways to educate you on all the different avenues that you have to invest your hard-earned money, right? So one of them is when we talk to executives from publicly traded companies. Another, however, is alternative investment opportunities. Now, this is a really fun and interesting one for a lot of people that I've talked to so far from our viewer base, and that's the rising demand for whiskey and how investors can capitalize on the trend. We're going to talk with two incredible individuals who have had great success, not just in this space, but also in the previous startups and programs and businesses they've run with great, phenomenal exits. And that's why I'm really excited to talk to them to see what exactly is happening in the whiskey world and how me, you, the viewers at home, can take advantage of it. So I'd like to go ahead and welcome Anthony, who is the CEO and co-founder of Vinovest, and also Vincent FLINT-HILL, all the way from overseas. What's going on, man?
Hey, Nate. Great to be on here, and thanks for having me on. Hey, Vincent, good to see you again.
Absolutely. Appreciate you both for hanging out with us. There's so much for us to kind of talk about. I hope I kind of laid the land of what today's conversation will be. But Anthony, I'll start with you first in terms of tell us a quick, brief overview of what is it that Vinovest does. I know we've got a video here. I'll play that while you talk.
All right. So Vinovest is a company that my co-founder, Brent, and I started back in 2019. And our mission is really to democratize access to investing in wine and spirits. It's been an alternative asset class for decades, even centuries, been used as a form of currency since Roman times, yet has really remained out of the public reach. It's really been an asset only accessible by ultra high net worths or industry insiders. And that's what we're really doing to change that here.
All right. And I'm glad you mentioned that, because I feel like whenever I hear of whiskey, you kind of hear of like high-end posh type thing. So automatically in my head, I'm like, okay, so do you have to have a ton of money to kind of be invested in this space or not? That clearly is not the answer, thanks to what you're doing. Vincent, go ahead and give me some insight on what brings you to this industry and what your background is in this part of the world.
So I've been in whiskey for around 10 or 11 years now. I actually started for whiskey author for my first 7 years. Currently, obviously, with a single cask. So we're an independent bottler. Our job is to sort of find single cask whiskies that are quite special, and bring them into market as a single cask snapshot of that distillery. Because obviously, if you were to walk into, this is the same for Scotch and American, 90% of the time, if you walk in somewhere, you will see a distillery bottling. It will be a combination of many, many casks. So our job really is to find individual casks and try and shine a light on sometimes distilleries that aren't as well known, or different cask types or different cask finishes that you wouldn't necessarily find from that distillery itself. So we live in that independent bottling scene, which is, distilleries will produce X amount per year. And we look for those treasures of finding casks that have been held on to for a little bit longer, aren't readily available to a consumer, and then look to put that into glass and then obviously give that to the consumer to try differences, try sort of variations on spirit that they may know or stuff that they sort of regularly drink. And what we're trying to do is show that, there's a snapshot of that in a single cask versus, a vatting, which may be, thousands of casks put together.
And the warehouse that, we just saw, there are obviously so many different casks and all that out there. And we've seen the trend kind of grow, right, in the whiskey markets. But I want to also kind of take a look at the future, Vincent, and kind of come with you here first. Why do you think we're going to see continued growth, and what's the kind of the acceleration reasoning behind the growth in whiskey? And why do you feel like it's a good trend to kind of continue following in the business? Like, what are you seeing with the insights and the expertise that you have?
Just from our perspective, and for Scotch in particular, what we see is that, in the late 80s and early 90s, when they were closing Scotch whisky distilleries, there wasn't necessarily approval at that point to sort of hold on to casks for longer. If you look at the majority of Scotch, majority is bottled at 3 years, 3 years in a day for legal reasons. It must be aged to be legally defined as Scotch. So what we see is that now people are actually holding on to casks for longer. And what that means is actually a very, very positive thing for the industry. We're currently looking, the amount of 80s and 90s casks that are still in wood aren't particularly, far and few between. people didn't have that idea that we're actually going to hold on to a cask for 20, 30 years. So what it means now is that people are, instead of bottling at 3 years old and we're just going to throw it all into this blend because this particular distillery makes this type of whiskey and it's going to be blended away. What it means now is for the consumer over the next 20 years is we're going to get stuff that we never imagined we ever would have got. Yeah. We're going to find that, more distilleries are now starting to produce, which gives us more variance. It gives us more malt types. It can give us, there's several ways to look at it. But what it means is that there's going to be more whiskey on the market. There was a big change, especially for Scotch, with the 750ml regulations changing a couple of years ago for the USA. And obviously USA is still the biggest market in the world. So what that means now is that independent bottlers such as ourselves, if we bottle one cask and we get 300 bottles out of it, we were only typically doing 700ml. We didn't have access to America before unless you were doing specific 750ml bottles. What it means now is that people such as ourselves are now trying to get into the American market. We're trying to sort of show that side of it. And also it means now that there's an even bigger market for us to go out there and actually find as well. So
it unlocks, it unlocks the opportunities. Yeah, it unlocks the opportunities for sure.
If you imagine, let's take America, for example, and you forgive me, I don't know exactly what's on the shelf at the moment, say in the coast of the West Coast. What it means now is that Scotch will continue to grow and hopefully command a larger market share as well. Because what we're doing is we're not limiting ourselves and saying, look, hey, we're only doing this size bottle. We can now have access to everything that we release. Stuff that's released through Europe and Asia can now go into America as well. So what does that mean? It means hopefully a bigger fan base for us, especially in terms of Scotch. It means that we're bottling more as well. And what that means as well, we can now go and get more casks. It means that, stuff that would have just been bottled as a 10-year-old for that distillery, hey, now we can get it, we can look after it for a couple of years. We can make sure it's particularly special when we release it. And obviously, most independent bottlers will taste the casks every couple of years or even quicker than that, just to make sure that what liquid goes into that bottle is absolutely special. Right. So that's going to be the next big change for the next 20 years. People are holding on to casks, stuff that would have just potentially been blended. The idea is that if there's that one perfect cask that was going into that blend, we can now keep that back and we can let that shine on its own. So that's the big difference of late 80s, early 90s, late 90s. There wasn't this investment side of things. Yeah. What it means now is that there's going to be a huge amount of whiskey in the next 10, 20 years that we'll have access to bottle to, which means that in theory, the quality will be so much better as well. And almost every market in the world will be accessible.
Yeah. And I think, Anthony, whenever we've seen this with other investments, and I know you have some background on this, I want to get that from you here in a minute as well, is we saw regulations kind of help out crypto. We see now ETFs for Bitcoin, Ethereum, and rumors of Solana possibly having its own ETFs as well. So what I'm saying is regulations and business opportunities are always kind of growing in different sectors. What are you seeing from the business side? But actually before that, give the folks an idea of your previous exits and your business background so they know who's running the ship here.
Yeah, absolutely. So diving into a little bit of my background first, I've been in technology my whole life. So really came into Vinovest and the wine and spirits world from really an outside perspective. My first business I founded while I was a freshman in college. It was an on-demand food delivery app called Envoy Now. And we were focused on the college markets nationwide. So partnering with dining programs, being student to student and really community focused. And we were able to scale that business out to 23 markets nationwide. I had the good fortune of being able to drop out of college due to the Teal Fellowship, as well as from pitching Mark Cuban, getting my first investment offer from him. And then it took every Silicon Valley entrepreneur's dream and moved up, raised VC funding and grew that for 4.5 years before we were acquired by a subsidiary of Walmart.
Yeah.
After that was when I first dove into alternative assets. That time was around 2016. Ethereum was starting to get hot, reach its first bull market peak. And I joined a cryptocurrency portfolio management company called Blockfolio, early team member there. And what we did was we were able to ride both the bull and bear markets, learned a lot about the user mentality through market cycles. And what that ultimately led me into was a greater appreciation and fascination into alternative assets. Whether it be physical or digital, started to dive more and more into it. And that's how I got into collecting whiskeys, wines, other alternatives. And what we did there really parlayed into my passion for Vinovest. Used a lot of the same trading principles, investment strategies that we were looking at from the crypto market, but onto a tangible asset like wine and whiskey, which kind of feels like the furthest thing away from crypto.
I was talking to a trader the other day on a show, and the biggest thing that she's mentioned, I've heard this advice quite a bit, is no matter if you're trading, say crypto, future, stocks, options, the philosophy and the principles you can apply to each of the instruments and each of the securities, no matter what. You're taking that knowledge into the tangible side of things. Okay, let's go back to the business of whiskey and how you're seeing the trends in terms of growth and what you're seeing and why your money is on the table here as well.
Yeah, so looking first into just larger trends, I'll also dive into regulations, as we also previously mentioned.
Yeah,
I think the trends for whiskey, especially the consumer side, is that there's a larger and growing fascination with the luxury products. Right? We've seen the craft beer boom 10 years ago, where there's more and more independent companies coming out, telling a story, creating a higher average level of product. The whiskey market is going through the same transition. Previously, it was really only 5 large suppliers that created the actual mash bills and recipes for every single whiskey in the world. That really meant that most whiskeys from America tasted the same. Now, with more independent bottlers, contract distillers, creating more, I'd say, artisanal or heritage type brands, we are seeing that growth and interest into American brands. Secondly, we're seeing a large shortage on the barrels being actually used for bourbon. So unlike most other categories of whiskey, bourbon can only be used for a brand new oak, which means that an oak tree takes about 100, 200 years to grow. The industry there was not prepared for the boom and the rising demand for the consumer interest. You can't really reuse those oak barrels for bourbon. You can ship them off to Scotland, where a lot of the casks are ex-bourbon casks. But because of that barrel shortage, we saw a large pent-up demand in the last few years, and it's finally starting to catch up. Secondly, what we're seeing from the regulation side is a lot of growth in the export market, especially from the Middle East and India. Just last year, India surpassed France as being the largest consumer of whiskey worldwide. And a lot of that is actually locally made in India, great whiskeys coming out of there, but also wanting a lot of what you can call bourbon from America shipped to India, blended into different recipes, and then also made into local brands as well. So
you mentioned that as you mentioned the recipes, and it looks like our one of our viewers, Becca, knows all the great things that you can have when you have the flavor induced and different types of products as well. And the trend that you mentioned, because now you have call it millennials, if you will, where they're trying to diversify where their money is going. And I know the article that you kind of referred to a little bit, whereas they're kind of so about stocks a bit, right? And you also have the baby boomers that are going to pass approximately $84 trillion to the next of kin, right? So that's about 21 to 43-year-olds that are going to get about 3 million or more in assets. That's an average based on the study that they did. And they've got to figure out where to put that money, whether it's in crypto, real estate, luxury watches. The volatility aspect, Anthony, is what I loved in our prep call that we talked about, is how there's not much volatility compared to, say, the crypto aspects of things. So you have a little bit of stabilization there. Is that one of the main reasons as to what makes this investment great, obviously, outside of the other things you mentioned as well?
Yeah, I think people come here for 2 main reasons. The first is the lack of correlation, right? Because public stocks, they depend on earnings reports, right? There's quarterly earnings, new technology, competitors. Crypto is, really a crapshoot, right? We really don't know what drives the markets for the most part.
Yeah.
And with whiskey, it's very, very stable and straightforward. It's about the maturation of the spirit in the barrel, right? There's a reason why an 18-year-old Macallan always will cost more than a 12-year-old Macallan. The flavors in the cask will develop, mature, become more complex and enjoyable, and the actual liquid will dissipate every single year, a certain low percentage points every single year, meaning that There's less and less of this more and more valuable liquid as it ages. So from a pure economic theory principle, it's very sound, right? There's more than just market demand and consumption froth. There's actually an underlying principle that leads to steady appreciation year after year. Yeah. And it's really not something that you can rush or slow down, right? Time is time. Maturation is really what it is. And I think that part of it is part of why the volatility in this market is also very low.
And the volatility is one of those where you never know what tomorrow is going to bring, and different regulations and things like that can kind of make a difference. Vincent, I've always kind of been wondering, and I would love to get your expertise on this one. What's like the difference between, say, American whiskey and Scotch whiskey markets? It can't just be the taste, right? So give me some differences from your opinion and your thoughts, and then anything I can ask you the same thing after.
Well, for us, I think is age is one of the big things. It's obviously if we take Kentucky, for example, the climate is incredibly different to as it is here in Scotland. You know, it's not really summer here anymore. It's you know, we've had a weekend of it and that's about it. Because obviously, if you look at those sort of places that are closer to the equator, as Anthony said about places like India, where there's a hotter climate, the whiskey in theory will have a higher angel share. And also it'll be able to draw more from the wood quicker because of the fluctuations in the cask. So whereas bourbon and rye may be much more shorter term. So when we say shorter term, we're still sort of talking 2, 4, 6 years for it to get there. You know, Scotch whiskey at least needs 3 years for legalization. But then you want it to go for as long as possible, because what you want is you want to try and get a real perfect marriage between the wood, and if it's malt, obviously, you know, you don't want one or two of them to overpower the other one. Just in my opinion, obviously, with bourbon, the higher age statement bourbon is much harder to find because the evaporation is so much more. You're losing so much more from that cask every single year. So you don't necessarily see the age statements on bourbon. You do in some instances, like, you know, Sazerac or Michter's. But with Scotch, it really is sort of a much longer game. You really want the cask to reach its full potential. Now, it doesn't mean that the cask won't reach its full potential in 5 years. It absolutely can. We've had some incredible independent bottlings of sort of 5-year-old casks that have just had the right cask type. But in reality, as Anthony said, it's those higher age statements that will always command a higher price point in the bottle. And it's those sort of the well-known distilleries with the high age statements will always command the most money because it's what people recognize. People want, you know, older stock. Something Anthony said a minute ago, which I thought was very, very important, with sort of our newer generation, if you like, we want to know more about where our food comes from, where our drink comes from, and all of those bits of information. And that's where the single cask side of it is becoming so much more prevalent, because it's the same as beef, same as everything. I was a butcher before I worked in whiskey. People want to know what they're eating. People want to know what they're drinking. They seem to be happy to pay more to actually understand that and see the process it's going through. You look at a lot of whiskies now, they'll have, you know, farm to glass, and everything will be done on the same site or something like that. Even if you look at some of what we would refer to as American micro distilleries, you know, you look at the amount of detail you get on that bottle. It's not just marketing. It's not just X, Y, and Z. It's because there is so much variety that goes into that one bottle. You know, we sometimes joke and say, well, how can we get all of that information on one label? You can't. You have to do things like this. You have to go to shows and see the people and meet the distillers. But it's really important. I think Andy had a really good point that we had the craft beer boom, which we obviously still see a huge amount of, especially across the UK and Europe. But it is, you know, people want to know, right, how long has my cask been aging? What's it been aging for? What wood type was it? Was it finished? You know, what's the nuances? What's the difference? Why is that what's in the bottle now there? And again, I think that's potentially a little bit of the difference between them.
Looks like I might have lost you there on my end. You know, Anthony, one big thing for me is the liquidity aspects of the markets as well. So let's kind of get back to Vinovest and how it kind of works. We have the link in the chat, by the way, for folks that are interested to learn more and how they can get in on this trend and have their capital go to work. But give us insights on how does it work? What is it that y'all do to kind of help create value for the investor and how that process works?
So Vinovest is an all-in-one platform for wine and whiskey investments. That means we handle everything from determining what the investor's goal is, the same way you would meet with a financial advisor first and talk to them about your financial goals, the capital amount you have invested, what else you have invested in other pieces of your portfolio, as well as what your investment time horizon is. Based on that, we'll be able to create you a bespoke portfolio of what we think would be best suited. So if you told me, hey, I'm looking to invest $5,000, I'd like to hold it for about 5 years, right? Yeah. And I have a moderate risk tolerance. Yeah. Our team can actually take what's available on the market and be able to help you come up with a sample portfolio. We then go out and source directly from those suppliers, insure it, bond it, have safe storage to make sure that the maturation process goes as accordingly. And then throughout the year, give you updates on what's happening to your barrel, right?
So it really is like me going to a Charles Schwab and saying, hey, I'm this year's old. Here's how much cash I have. Here's my horizon on when I want to pull this cash out. And here's what my lifestyle looks like. So you're kind of collecting all that data so you can say, all right, this game plan would be the best for you in terms of risk tolerance, in terms of price point, and all that stuff is what it sounds like.
That's exactly right. And then at the end of its maturity, we're also the ones that help you sell that barrel, right? So once maybe your bourbon reaches 4 years, we'll be actually selling that to a distillery that wants to be able to bottle a 4-year-old Kentucky bourbon, right? So that's what we are looking for, really matching what the investors' preferences are to the types of investments that we have, right? Because just like different bonds have different maturities, different barrels have different maturities. And just like you get your quarterly earnings reports, we promise to make ours a lot less boring than the 30 pages you get from Schwab. Yeah. It's a much fun topic, right? And I think the final thing, which I'd be remiss not to mention, is the physical enjoyment aspect of it, right? You can actually go to our warehouse in Kentucky, in Wyoming, in Scotland, and actually visit your cask, right? So Vincent actually took one of our investors 2 days ago, I think, to come visit his cask because he was spending a few days in Scotland with his family, right? So I think that physical, tangible aspect of it is something that many investors are looking for, right? Because they want to shield some of their assets away from the volatility of the stock market, the volatility of the crypto market, and treat this as a piece of diversification. But it's also something that you can touch, feel, and experience and learn about in real life as well.
Yeah, I agree on the physical aspect of it. It's one of the reasons where you kind of get to touch the property that you own and your investment as well. And instead of just seeing it on a screen that get kind of launched 5 minutes because someone reported something, crazy. What trend are you seeing though? We have different, like you mentioned, you get an idea of how much of a time horizon you're looking at in terms of investment, right? But what's kind of like the trend? What's kind of like the average that you've seen based on data from the investors that are working with you at the moment when it comes to these opportunities?
So we've seen for, say, a 5-year hold in the American whiskey market, average annualized returns be in the mid to high teens. So 15%, 17%. Some of the whiskey highlights here on the slide are some of our best exits. So these are ones where the whiskey wasn't even actually at its maturity point, but we were really made an offer that was too good to refuse and gave our investors an early exit. So there's always those because of the demand, because these whiskey brands and distilleries, especially in the booming ready-to-drink cocktail market, are growing so quickly. They oftentimes don't have the capacity or the planning to be able to keep 5 years worth of excess inventory on hand. So that's why they have the need to be able to buy ready, already aged, ready to go barrels, in which Vinovest is one of the largest suppliers in the country that can just plug and play into it. So we really act as really like a capital partner for a lot of these growing brands and distilleries.
Vincent, when it comes to the process of, because you're kind of on the ground floor and you're dealing with this on a daily basis as well, what are some risks that you feel like investors should know about? But more importantly, how are they kind of like, it's an investment. There's always going to be risks. There's no questions about that. But I'm speaking in terms of like, is there a trend that people should keep an eye out for, right? Anything that you're seeing where it's like, hey, we are aware of this, but we're not worried because of X, Y, Z.
Like I say, whiskey's a bit different, especially with Scotch. So anytime we're looking at a cask, especially from an independent bottler's standpoint, we're looking at where is the cask distilled and does it have its naming rights? They're massively important because at some point, as with Scotch or bourbon, all whiskey is made to be drunk. It's just how it gets there inevitably is what's important. So the main factor or the sort of real main risk with whiskey is leakage. We obviously spoke about casks earlier, and there is, with fluctuations, it's when you look at it, obviously it's spirit held in wood and metal bungs. Like you can see in that picture behind me, there are actually casks that we've had delivered to our warehouse today, which are going to be re-racked because, again, we're looking for how can we get the most flavor or how can we do this. So in reality, the biggest risk in a physical sense is leakage because, casks will occasionally leak over time or whatever it may be. It all depends. Like with our warehouse, we're quite fortunate that we're wrapped. So there's two types. When you saw the picture at the beginning of the bourbon barrels, they're all palletized stock. Some distilleries in Scotland will use palletized, or some warehouses will. We use racking. So basically what it means is every cask sits on its own. We can actually go and see and touch and look at the end of every single cask. What it means is every week as well, we can do a walk round and we can actually look for, can we see drips on casks? Can we see this? So this is where it's like with Scotch is slightly different to bourbon is we do regauging, which obviously Americans still do regauging. But given that, say, for example, a cask of whiskey wants to get to 30 years old, we maybe every 8 to 12 years will regauge a cask. So what we'll do is you have the information of when that cask spirit was first put into wood. What we'll then do is we want to check that over sort of 10 years, just to see what's happening with the barrel. It could be quicker. If we see a leak, we'll obviously then regauge it or potentially re-rack it. So in terms of an actual sort of what's the liability of a cask leaking is the biggest sort of factor in our industry, I'd say.
The main thing that I love is the fact that you kind of do an audit and you kind of walk around and say, hey, is everything in the clear? Is everything good? Because you always want to kind of have your hands and eyes on everything that's happening, especially because you're dealing with so much volume there. Anthony, from your perspective, we've talked about the regulations aspect. That was really kind of beneficial as well. Is there anything else that you feel like investors need to know about this? Anything in the trends, anything in regards to the investment aspect of this that you feel like investors need to know when they're kind of taking a look at this opportunity?
Yeah, I think Vincent definitely addressed the risks very well. I think the biggest risk is the fact that it's a physical asset, it's a living, breathing thing, and there is risk of actually the investment going bad, like literally, right? I think the other thing is that it's a very long-term investment. The liquidity of buying and selling a whiskey cask is akin to buying and selling an apartment or a house. Right, there's a limited window in which the demand for these barrels goes up. Right, there's a reason why you see 12-year-old scotches and 18-year-old scotches. You don't really see a 17-year-old scotch or a 19-year-old scotch on the market. There are certain windows and years where those whiskeys become a lot more marketable, a lot more desirable when they reach that window. And prior to that or after that, you're really in this sort of dead period. Right, a lot of it is also because of regulations. So, for example, you can't call something a Kentucky straight bourbon unless you age it for 2 years. And the brands know that they can price a premium if they can put that label on the bottle. So if you're, say, at the 19-month mark, you're not yet at 2 years, and you're looking to sell it, everyone's going to tell you to wait 5 months, right? So this is an investment for a patient investor. It's not a 24/7 crypto market, not even a 24/5 stock market. It's really something for a patient investor, and a patient investor will be rewarded in due time.
And I know you, Anthony, you had already kind of briefly answered this, but I want to bring it back as our viewers asking. Elon, appreciate the question. What was the return in these barrels, and how liquid are these investments? Great guess. Thanks for hosting the webcast. I'm going to bring up the graphic in terms of the exits, but if you could briefly kind of re-go with what you had mentioned, Anthony, in terms of the exit aspect of the business here.
Yeah. So these. The first two were exited at around 9 months to an RTD, so ready to drink cocktail brand.
Okay.
So they took these whiskeys, blended it with others that they were creating, and made it into a cocktail. Right? Maybe it was a canned whiskey sour or a canned old fashioned. So because of the growth of that brand, they were willing to pay a premium, pretty much paying up for a year-old barrel or an 18-month-old barrel at 9 months to keep up with their demand. for the third option on the right, the American bourbon, that one was exited at around the year mark. So that one was closer to what our expectations are on these. But all of these, I want to mention that since our whiskey program is only a little bit over a year old, are below what our recommended hold times are. We believe that there'll be a lot more options on the table between years 3 and 5, and especially on the Scotch side, where as Vincent mentioned, the aging capacity for these spirits are much longer than on the whiskey side due to climate as well as the way that they age them.
When it comes to let's talk about money and money aspects of it, right? If it's so lucrative, right? We've kind of talked about this in various conversations, Anthony. If it's so lucrative, then why do you think it is that distilleries still need the capital to kind of continue making this work and continue it growing?
It's a very capital intensive business, right? All of the equipment and the aging part of it. Say, even if you knew you could triple your money in 4 years, you need that every single dollar, every single ounce of space in the warehouse to be able to keep producing for the next month, right? These are almost 24/7 running operations. Things break all the time. People, unfortunately, sometimes get hurt or need to go on vacation. So the balance sheet management of businesses like distilleries and contract distillers is extremely important. And they simply can't really afford to be able to sit on inventory for 3-4 years without reaping a single dollar. Yeah. So that's why they come to capital partners like Vinovest. Yeah. And a lot of times they do buy it back themselves, right? They do know that they have essentially like an option on that contract when they sell it to us in the beginning to say, hey, I know I'm most likely going to buy it back. We'd like to create a strike price at X dollars more than what we sold it to you for. So that's, for us, another benefit to have a little bit more safety, to have that downside protection on the future returns.
Yeah, I love that. And I know our community knows quite well how options work, especially if you're going to buy a put, if you're trying to, write some calls on that aspect. So I love the comparison there. Vincent, any other thoughts from you in terms of the process of, start to beginning when it comes to whiskey, the aging, the bottling process? If you want to provide any details on that, more than you kind of already have for the folks that are just joining us, and then we can kind of wrap it up with final questions.
Absolutely. So if for an independent bottler, we want to look at what goes into that glass. And as much as, as we mentioned before about the single cask side and bits like that, it really matters what goes into the glass, because obviously, let's say, for example, you're a blender and you have 1,000 casks you've got to put into one particular bottle. That's fine. You can hide a bad cask in reality. You can mask it. For an independent bottler, you literally, live and die by the actual liquid you put in that bottle itself. If someone has a bad single cask, you then obviously can't, put it out there, because they're not going to come back to you each and every single time. So that's the important thing for us. We want to make sure that, the liquid's been taken care of. Whatever actually has originally gone into the barrel at the beginning has been absolutely great. We like to see that traceability. As we said, we want to see, how has it been in its hogshead for its entire life? Okay, absolutely fantastic. And again, as we're saying, if we're looking at sort of 30-year-old Scotch at this moment, those barrels are now fewer and far in between for us to actually find and to bottle as well. So that's a really important factor. It's when was the cask regaged? All of these things combined then go into that final bottle. So yeah, it's buying it young, it's sitting on it for a long time, making sure the wood options were good. And as we said before about the warehousing, making sure the warehousing is, we catch a problem early, that's absolutely fantastic. You could save 90% of liquid if you catch a leak early, which is absolutely brilliant. So yeah, so it's really a long game for Scotch. It's longer holds. It's looking after the liquid. It's coming and seeing it, as you say, coming and seeing it and touching it, and actually realizing that, hey, if you have a cask that's up to 30 years old, you can draw off a couple of bottles yourself. We've done it before where we've had private casks we purchased from private individuals. We've given them a case back because it's been quite a special thing for them. Maybe a family or maybe something like that. And there is sort of several options that way that you can actually do. It's obviously then getting into it and going, well, what do I want to do with it? Is it physically a cask that just sits there? I never think about it. Is it a cask that's purchased and then a sample's drawn at the beginning because you want to taste what it's like at 20 years old, and then watching it go all the way to 30 years old and then bottling it under your own label or something like that? There really is sort of, with Scotch, a myriad of options. It all depends what someone's looking to do with it in reality.
And then when it comes to, Anthony, to the, you know, the process that I personally love, and again, we'll put the link in the chat here and we'll show it on screen as well, is when folks, they can just kind of talk to someone and get an idea of, hey, how can I have this be a part of my portfolio? What are the investment opportunities looking like? There's no like, hey, you got to commit X, Y, Z. You can get information before they kind of make that decision. This is what my understanding is based on that site and what we've talked about.
Yeah, that's absolutely right. Come have a conversation with our advisors. Really no obligations or commitment. We just really want to learn to see if this is a good fit for you, right? If it's not, we'll let you know as well, right? If someone comes in and tells me, hey, I'd like to get in and out in 6 months, you know, we'll educate you and let you know that, hey, this is probably not the best investment for you at this stage.
Yeah.
Right? If you haven't invested in stocks or real estate or anything else, this probably shouldn't be your first investment either, right? Most of our clients are ones that have their stock and bond portfolio, maybe some real estate, and they're actively looking for that diversification aspect of their portfolio, usually allocating between 5 to 10% of their investable assets with us.
Appreciate that. Vincent, any final thoughts from you before we go?
No, not at all. Like I say, we're a bit more open book. There's, even though we're obviously up in Scotland, there are a myriad of things you can do. Even if you have, you know, we've worked with people that have favourite wineries and wanted to re-rack casks from Chateau Margaux or whatever it is, you know, re-rack Scotch into that. There are several options you can do. And like I say, it ever depends on what that person actually physically wants to do. We've worked with private investors before to have, like, you know, 29, 30-year-old bottling. So it's all out there. With Scotch, it's much sort of longer than Kentucky is, particularly with bourbon. But no, like I say, it's whatever anyone wants to do. And then it's looking at that independent bottler at the end of it, who's actually going to put it into glass and then ship it to Japan or ship it to Latvia or wherever it may be. So yeah, it really depends on what that person wants to do.
Chateau Margaux. It sounds fancy when I try to order it. I'm sure it'll sound even better when I own a piece of that action. Anthony, any final thoughts? There's so many topics when it comes to this. I'm sure there might be some that I missed. But anything else that the viewers need to know about that I didn't bring up? Any final thoughts from you?
I think we've covered a lot today, right? Just a little bit of the historical returns, why the global trends are pointing towards a positive future for whiskey, and then a little bit about how Vinovest and single cask act in this space as a party that can help to navigate you through, especially if you're new to it.
And that's the aspect I want to kind of point out is Vinovest helps you get an idea of what your portfolio look like at the moment. Where can you go ahead and get more insights from? That's y'all. You help with the investment side of things. And then you also help with the exit aspect of it as well. So you're kind of like that one-stop shop is, I think, what you had said earlier. So I appreciate that. And I appreciate both of you for your time.
No, thank you.
Thanks guys for the time. Really enjoyed it.
Absolutely. You too. Take care. And, chat, we always appreciate you and your questions. Elon, Becca, appreciate you guys participating in this. And again, it's always great to see how can you have your hard-earned money work for you overnight. There's ways to do it in the stock market. There are ways to do it with, ETFs, indexes, options, crypto, but there's also these amazing alternative investment opportunities as well. And as always, get more insights. And the best way to do that is with the folks at Vinovest, because they can properly tell you, hey, with your portfolio looking like this, with your horizon of 6 months, a year, or 2 years, 3 years, 5 years, these might be the best opportunities. Or they'll be honest with you and say, hey, this might not be the best thing to do for your money at the moment. But either way, as always, we appreciate you, our community at Benzinga Nation, and we'll see you next time.